Hello everybody, welcome to Altcoin Buzz Trading. My name is Randy. We are going to be discussing trading and trading tactics. I'm going to speak to you as traders. And if you are unfamiliar with anything I'm going to be discussing on this channel, then please go ahead and ask in the comments and I will answer your question because I love teaching people trading and I think it's an amazing resource that can help change your life and make things a little bit better for you. So let's get started with today's video. We're going to be discussing Bitcoin, SafePay, and Thorchain. A few opportunities as the market continues to chop itself up. Bitcoin here was looking like it may start to go into a rally situation as of yesterday, but let me zoom in here for you. Yesterday we ended up with a large wick bringing us all the way back down, although given today and what's happening, so this is the 2-hour time frame. Given today and what's happening, we had the reversal up here with lower volume in these two consolidation candles on this 2-hour time frame. I think we're just in a low volume, low angled rise essentially. Bitcoin's been in a choppy situation now for a longer period of time. I anticipate it remaining in that choppy situation for an extended period of time. And what does that mean? It means at least another month or two. When Bitcoin chops like this, what usually happens is a bunch of randomness, and you'll eventually find one or two coins that set up and do something good, but for the most part you'll see random pops that get evaporated very quickly. A couple will sustain. It's just hard to know which ones are going to do that. And yeah, that's kind of what's happening. So it's what's been happening, for the past year. It's really what's been happening. So, all right, BTC, couple other things to note. If you notice, I have a large orange box on my screen here. This large orange box is indicative of the choppy range that Bitcoin has us in at the moment. I'm going to actually extend this down a little bit to the peaks there. So we're going from the peak up here to the peak down here. This one only has one anchor point at the top. That's okay with me. I don't really have any major issues with that at this moment in time. You could drop it down to this level where I have this green horizontal, but I like to give us as much room as we can in these ranges so people don't get faked out. Same with the downside. You can move it up a little bit, but this one already comes pretty close. This one from about a week and a half ago. So we're stuck in this range, and we're going to be stuck in this range until we break the range. Sounds pretty common sense, and it is pretty common sense. Most of trading is common sense 3 or 4 layers deep, to be quite honest with you, and that's the hard part to it, is managing all of your emotions while you're doing nothing for the most part. And in the market recently, we're mainly talking about not doing too much, because if you're new to these are markets that are not going to make you a lot of money. They're just not. Now, if you're using traditional trading strategies, if you're using choppy trading strategies, which are, in all honesty, are a form of traditional trading strategies, you can do okay, but even that's few and far between. All these mini tests of the downside here, these are all very tricky. Mini tests of the upside here up at 31K, those were all very tricky. I know a lot of people got hurt in both of those situations. So generally, for most of this, I advise not to do much, if anything at all. And if you are going to do something, do it with a small amount of money so you get hurt less if things go wrong. And if things go right, you make less money, and I know that feels bad, but it feels worse to lose money than it does to make money. So let's try to avoid those negative emotions. The reason I'm talking about this so much rather than the charts is it's actually more important than the charts, is how you handle the charts. Okay. So when it comes to trading this environment right now, until we actually break into some kind of a trend, there's not a lot to do. We had a plan over here to rally us up to a number of points where we could stall. And we stalled at the very first one, this purple for 50-day moving average. We didn't even get to the 200 daily moving average yet before we hit a stalling point, which we just saw in the 2-hour time frame. Now, we could get above this. And if we do get above this, what that implies is that there's just not a lot of momentum behind this move. Momentum is usually indicated by volume, and you can see the volume down here, not very explosive. It's actually very much in line with what we've seen. The peak volumes aren't really that much more dramatic. Our average volume line and average, though, is being played with, and that's a good thing. So that's what's stopping us from rolling over. That's all we get out of that. Okay, so I don't think there's a lot of trades on the table for BTC at the moment. But let's go back to the 2-hour time frame and just talk about shorter term possibilities as you guys are learning or whatever you're doing. Whoever you are, I don't know who you are. Introduce yourself. If you're going to be a regular viewer, If you see me on the other Altcoin Buzz channel, let me know what you'd like to see down below, what your style is, and maybe I can tune things more towards specific styles if I know who's watching. All right, so but BTC on the 2-hour time frame, really, there's only one thing to look at, in my opinion, right now, is the trend line of this. Since we hit the bottom here and started going up, this is pretty much the only thing that we need to really be concerned with, as it's your measuring stick. If you go underneath of this, momentum is just lost, and it just is. If we stay above it, that's good. We can maintain this trajectory. But as we can see, there's already a considerable amount of chop in the chart. Given the percentage rise, the percentage chop is not really tenable for large rallies. So 10% movement up, and this last drop was a quarter of that. So over the past 24 hours, you've got a quarter of the volatility of the entire move. That really isn't a very good measurement if you're going to measure volatility. So I think chop is very likely for the foreseeable future here. All right, let's go back to the daily and talk about some of our altcoins. So while Bitcoin is not falling, the alts are going to have a chance to do a few things. And we've been working with RUNE for a while now, and this thing continues to set up better and better. And now we have a full-blown cup and handle on the daily time frame. So let's zoom out. Thorchain does have a few things fundamentally going on with it to kind of preclude this large accumulation going on, and it's behaving very nicely. So one thing you can see is our low is actually established over here in June at about the 78-cent level. We rally up, and we're able to form this large cup base, breaking out here at the 110, right? So that's one stage base, and then you have a large vertical movement to the tune of almost 100%, about 80+% up to the peak there. Coming back down, giving us a large cup, and now forming a handle. One good thing about cup and handles, and most chart patterns, is they tend to have a volume signature that goes along with them. This particular one, what you'd like to see is declining volume on the left side, which we have here, left side of the cup, that is. So here's your cup, right here. There's your cup, and your handle. This thing keeps popping up in my face. That's annoying. Your handle right here, the past 3-4 days, volume should be declining in the handle. And look at that, past 3 days, declining volume compared to that fourth topping day. So not a bad signature there. Another thing you'd like to see is on the right side of this cup, where these 4 bars come in, is increasing volume. And we do have slightly increasing volume. It's not tremendous, but it's good. And so we have to give that the benefit of the doubt. So good signature, good signature, good signature, and a good signature in the handle. All right, so everything is in the favor of this. So I've got, we're going to add another trade to this. We already have one on from the early breakout of the 167. This one does happen to work. There were a few that didn't, unfortunately, but this one is, so you have to stick with it, cut the other ones loose. So this one, I'm just going to do this kind of off to the side here. We traditional buy point would be a buy at the 1,981. Your stop loss could be underneath recent things here, which is about 8.73. That's pretty deep for a stop loss, and we're just going to have to live with that. But your potential target for this, there's 2 ways to take this. You can take the whole depth of the cup, because keep in mind, just to get from the bottom of the cup to the top is the depth of the cup. So we can take that. And if you want to get very aggressive, depending on how big the volume signatures get, you probably could actually take the upswing here. And let's just go from the breakout point to the top so we're not getting greedy. And we're going to end up with something like that, a little bit larger. So that's a 47% move for a 5.38 risk-reward ratio. And the other one is 84%. So as high as 365 and as low as 291. So these are kind of your 2 potential targets for this chart at this time if we were to break out. Now, I do want to say that in order to play these effectively, first of all, if you bought early, you're good. You don't really have to do much. You could move your stop up to where the stop is, securing profits in case this thing fails overall. But if it does break out, you have to buy at the breakout point. You don't buy early, because if you buy early and this doesn't break out, you're done. You're just taking a loss really for no apparent reason. If it gets down lower, kind of towards the breakout or towards the stop loss point, depending how it handles it, if it gives you a low volume drop, into these levels, you can try it with a smaller entry position. That would give you a little bit of a advantage. But if it comes down in high volume, you kind of have to avoid it. Reason being is high volume indicates massive selling pressure. So why would they break it out if they're going to sell it off before it even breaks out? Okay, so you have to understand what you're doing there. All right, so that's RUNE looking pretty good. Probably one of the best looking charts in the market right now, in my opinion, to be honest with you. There's really not a lot better than this right now. And then SFP, SafePay. So this we actually had a short trade on, and I'm going to revisit this short trade. Let's go to the 2-hour time frame. Okay, so we had this over here when the market was thinking about rolling over. Then the market kind of bounced a little bit, mainly Bitcoin, right? Bitcoin bounced a little bit. SFP come up here and triggered stops, but actually not by a tremendous amount. And so we came up, rolled over, and this trade actually, I really wasn't watching for it, to be honest with you, but I did see it again today. This trade was still viable. So let's say you get stopped out up here, that's okay, and then it rolls back over again. This trade, even though it broke our stop loss, it really didn't break any additional rules. It didn't break any additional, it didn't make any bullish structures, if that makes sense. So what happened is it essentially extended when it was going to break down into basically yesterday or the day before, depending on when you did that. So if we get another bounce here with, hopefully this makes a lower low here, that would be better. But then if it bounces up and makes another lower high, I think that could be an entry. And you can lower your entry here. Let's just say it gets here, right? You lower your entry to there. You actually bring your stop loss down to the prior high at 2.25% at the 2182. And I think your target remains the same. I don't think there's much adjustment that needs to be made for this trade. If you want to buy it right now, I think it's a little bit too low. You want to wait for that snapback. That's the better, wiser thing to do. And then, let's say you end up getting in right there. That makes it a 3.76. On the right on my chart here, you can see the numbers, 2182 for the stop, wherever the entry ends up being, and then 1829 potentially for the target. And that gives you a 3.47-ish risk reward trade. But this would be, like I said, precluded at this point on a snap back up. If we take a zoom out here on the daily, keep in mind this one came up and failed, kind of a cup. Not really a handle on this one. Failed a cup breakout. Okay, now it's kind of on the way back down, and most of the time these will erode. And if you look at a coin like this, its history is erosion. So I don't think I'm stretching when I think this thing can pull all the way back. I don't think it's a bad trade. I think most of the market just took a little bit longer with that bounce, but most of these ones that had failed breakouts from the last go, I think are still valid. So you can, you always have to adjust with the market. It's never going to give you exactly what you want, but we'll see what happens. All right, ladies and gentlemen, thank you for joining me on Altcoin Buzz Trading. I want you to do me a favor. Not going to ask you to hit the like button. You know to do that. Everyone does that on YouTube. So if you don't do it, you don't do it. If you do it, I appreciate it. But leave a comment. And that has less to do with the algorithm, more to do what I can deliver to you in the future. That's more important to me, to be quite honest with you, than the algorithm. I think if I deliver you quality content, I'll be rewarded with more viewers, and we'll see how that strategy goes. All right, ladies and gentlemen, thanks for joining me on Altcoin Buzz Trading. See you tomorrow. Bye.